Brace for impact. That's what I can tell you this morning. Uh, the world markets have taken a bit of a turn for the worse. Now, let me be under no illusion to tell you that I know how this will play out. I don't. I don't think too many other people do. Most people who had predicted that the markets will crack have been predicting since 9,800, and the markets didn't. They went up all the way to 10,300. I'm not trying to denounce anybody. All I'm trying to tell you is it's very difficult to figure out what the market will do on any given day. Just that the last few days we've been saying that the risk reward was not in favor of making fresh large long positions. Now it's starting to play out. It may well play out for a few days or a few percentage points or both. Let's wait and watch how it does. For now, let's tell you the data. The data suggests that the US markets yesterday had the deepest gash since March. Now, there's a second wave of the US virus cases that is starting to come up. If you log on to BloombergQuint.com or Bloomberg.com, it'll show you that. And that's probably the reason why we had such a big, sharp candle on the downside. I mean, it's the third straight day of fall. So it's not just out of the blue, but it's just such a very, very sharp fall. And the nature of the fall was not great. I mean, just if you just look at the index and the internals within, you will see that almost 95% of the constituents actually had a day in the red. It tells you that it was not select set of heavyweights which dragged the index lower. Yes, they would have done that, but a large swaths of the market in the US markets came off. 95% of the S&P stocks were in the decline. That tells you a story about the market breadth, doesn't it? Now, obviously, as a result of that, Asia is not starting off on a good note, and you have a start which is in the red for most Asian indices. I mean, look at the early risers, or you look at the mainstream Asian indices. Almost every single index has a start which is in the red. So shouldn't come as a surprise to anybody as to what the Asian screen is looking like. So most markets are looking weak in the session today. They may be, some of them may be off from the lows of today, but looking weak. Frankly, when I looked at the SGX Nifty screen this morning, I was pleasantly surprised simply because it was not down that high gash 5%, 5.5%, about 2.5%. Though I must say that it was indicating a level of about 9,500 in on close yesterday. For now, it looks like the SGX indicates a start, which is about 9,600 or thereabouts, and this could well be just a flash move, and then the markets could crack further as well. Again, very difficult to say. It just looks like it's starting off lower. I think a lot of technical analysts are telling me that the wave 3 of this current up move takes the index down to 9,700 levels, and then it restarts, resumes an uptrend. But I think it's very difficult to say, frankly. So if you look at the trade setup and what I believe could happen, it's very simple, frankly. I mean, it's all about what the different asset classes also do. By the way, just keep an eye out. Just before we get to trade setup, keep an eye out on the rupee as well. Yesterday, the dollar has fallen against all major currencies, but the currency, the Indian rupee, ended at the day's low vis-a-vis the dollar, and I think it's a 2-week low that the Indian rupee has vis-a-vis the dollar. So that's not pretty signs from an Indian market watcher's perspective. But yeah, the dollar has ended weak against a host of other currencies. But the trade setup for the day today, and that not too pretty. I reckon, and probably anybody's guess, but I reckon that financials will be the usual suspects to lead the charge on the downside. You wouldn't expect the index to go down without the weakest link right now looking weak or going down further. So financials would be the ones which would go down lower. Defensive names could see buying, but I would doubt that there'll be some major gains which are likely in this. And I think more, I would presume that a lot of people would be tempted into thinking that, oh, 10,300 was the top. A lot of stocks have come off from those levels, and therefore impulse buying might come in. I think it would be unwise to go into any kind of impulse buying mood until the global markets show some stability. For now, we are firmly and truly linked to the global markets, and therefore what the US markets do and the other markets do is something that our markets would do as well. So please be mindful of that. Don't be into impulsive buying until the global market shows some stability. That's the simplest rule that I think anybody should follow right now. You don't want to time the bottom. You can miss the first 10% on the upside if you are indeed in the mood of buying, but it's better to do that when the trend resumes, and one doesn't know quite well when it does. It might be a long time away. However, the stocks that you should monitor on a session like this, it's difficult to give some. By the way, mind you, sorry, I just missed the fact that the FI flows have been negative for the last 2 days. Not big numbers, but the FI flows have looked negative. So about 800 crores yesterday, 900 crores day before, and after the first 9 days of positive flows, you're starting to see the flows moving out. The stocks that you should monitor today is three earnings: Eicher Motors, Hindalco, and Mahindra. So I'll watch out for all of these three. More important, the commentary from all of them, because the FADA details yesterday seem to suggest that auto numbers are looking very, very wobbly. The consumer sentiment is not that great, even though dealerships have opened. Therefore, you have to be mindful of the fact that Eicher's commentary might well set the case for what the stock does in the near term. Similarly, for a Hindalco, let's wait and watch if there is some positivity there. But at 9:15, there are two or three names that I would watch out for. First, I would watch out for Kotak Bank. That is one of the most important stocks that I would monitor today, simply because the financials look very weak too. So Morgan Stanley's come out with this note on Kotak Bank. It's a note on financials, but on Kotak Bank specifically, they mentioned that the stock price could show some volatility in response to the RBI discussion paper proposal of the CEO tenure cap of 10 years for promoters or major shareholders. Now, viewers, what this means is this RBI discussion paper is saying that they want to improve the Indian bank's governance, and they've proposed a tenure cap for 10 years for promoters or major shareholders and 15 years in other cases. Now, if this discussion paper goes through, then the tenure of the Kotak Bank CEO would be limited for the next 2 or 3 years, and there could be a transition that you would see. And while it's 2, 3 years out, because it has come out late last evening, there could be volatility in the session. Jefferies, Morgan Stanley, all of them believe that there could be volatility in Kotak Bank, AU Small Finance Bank. So do watch out for Kotak Bank in particular. Financials would anyways look weak. This one could be weaker. SBI Life Insurance, there's an OFS of 2.1 crore shares, which opens today. Floor price of 725, a discount of 2.1% to the price of yesterday. So do watch out. My error out there, I meant tomorrow, which means today. So the OFS is today. So keep that in the back of your mind, that the SBI Life is the stock that is in focus. It will start off marginally lower, but could be weak. And I think, viewers, I don't want to talk about a lot of other names because the markets itself will be down. But Reliance Rights, listing today, and could keep Reliance in focus. But keep in mind, I think a lot of people will believe that it might be advisable to go in for buying into the Reliance Rights as well, because they could give a bigger bang for the buck compared to the mainstream stock. So do watch out for Reliance Industries. That could well be a stock that would be in focus today. So three large names that I believe I should bring out. A lot of other smaller names which might react to results or otherwise, but I think largely the market would be lower. So brace for impact, and keep in mind that it might not be the easiest time out today. I'll just end with a quote from Allianz Chief Economic Advisor Mohammed El Erian. He mentioned this after the Fed meet, and I think it's pertinent even now. So it's just 2 days essentially. That's why he said that you lose if you try to undo what you've been doing. You lose if you try to do more, and that's what markets are pushing for. And you also lose if you don't do anything because of the massive disconnect between markets and reality. I think everybody's been trying to talk about this, that there's a disconnect between markets and reality. Could this be the start of some bit of connectivity out there? They don't necessarily need to do that, but maybe the markets could just now start to show what the economic realities are. Thanks so much for tuning in, and good luck for trade today.